Welcome to today's Kenya stock market update for 4th of August. Of course, I'm very excited because this update is coming against the backdrop of the Nairobi Securities Exchange for the first time ever crossing the 4 trillion Kenya shillings in market capitalization, which is an amazing value if you look at it. It did cross yesterday, the highest ever. And the effect of this is also reflecting in the share prices and the specific sector performances. Because today, the market has largely performed very well. The NSE 20 share index has improved by 209 basis points. And of course, not all the stocks have done very well. There are those which have declined, as you are going to see sector by sector in today's analysis. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case of some kind of topics which you like, down there is a button called subscribe. Click that button to subscribe for you not to miss any of the amazing analysis I do each and every day. And also in the comment section down below, I've pinned additional resources in case you need to understand deep issues around stock market investing and continue investing wisely. Having said that, looking at sector by sector, starting with the agriculture sector. The agriculture sector today did close in the red because of multiple reasons. Of course, despite there being the national strong agricultural growth momentum, there's also listed companies continue to face high operating costs and also commodity price pressures, more so globally. In this sector today, the top gainer was Asini Limited, which did gain by 3.76%. And this was likely supported by improved market sentiments and bargain hunting, which has been happening on the stock really, okay? And then the biggest losers today in the agriculture sector were Williamson tea and Kapchorua tea. Williamson tea did decrease by 9.94%, which is a very big decrease in a single day, okay? And then Kapchorua tea did decrease by 8.83% in its share price. Williamson tea specifically, the decline reflects profit taking, thin liquidity, and continued industry headwinds, because also it's been having quite some challenge, specifically in the industry. And profit taking, after having a strong rally, of course, there's investors who are taking their profit. And then also for Kapchorua tea, we are looking at the decline of 8.83% being the beginning of traded ex-dividend. You know, we all know Kapchorua tea did pay an amazing dividend. So the market is adjusting the price following the declaration of the 30 shillings per share dividend. And then the second sector, which is automobile. Under automobile, of course, we only have one company listed, that is Car and General. And today, Car and General did slip by 0.32%, quite a marginal decline. And this largely reflects the normal profit taking after its exceptional rally, because the Car and General stock is the best performing stock at the NSE, having gained upwards of 200% year to date. This year alone is gained upwards of 200%. That tells you the stock is doing very amazing, and this really reflects the normal profit taking after an exceptional rally. And then the third sector is the banking sector. Of course, banking sector is an interesting sector because it is very dominant at the NSE, and today the banking sector has had one of the strongest rallies at the NSE. And against that particular backdrop of NSE gaining to pass upwards of 4 trillion Kenya shillings in market cap, the banking sector does account for 42.5% of that, because banking sector firms alone do account for roughly 1.56 trillion in the market capitalization value at the NSE. That tells you the banking sector are the firms there are very dominant and are broadly doing well, also contributing to the rally of the entire Nairobi Securities Exchange. Top gainers in the banking sector today was a number one, that was Family Bank, which did surge by 14.67%. Yes, guys, Family Bank stock did increase by 14.67% in a single day. And this is an extension of its strong rally post-listing momentum. Of course, we all know Family Bank was listed most recently, and it's been on the upward trajectory. And then the second biggest gainer is HFCB Group, basically called Housing Finance Group, okay, which did gain by 6.2%. And this is on continued investors' confidence following strong earnings growth and of course its recent rebranding, why it changed from the HF Group to HFCB sometime about 2-3 months ago. And then among the losers in the sector, not really very big losers because it is more about market correction, were Standard Chartered Bank or Stanchart, which did lose by 1.11%, and then Cooperative Bank did lose by 1%. And the slip of this was mainly about profit locking. After recording the highest kind of like volumes in trade, and also there being positive rally in the banking sector. So investors were doing something called profit locking, which of course does also have some impact on how the share prices behave. And then the fourth sector is the commercial and services. Guys, this sector did deliver mixed results because there are those firms which did gain very well, and then there are those which lost. Of course, the media companies did see quite deep in their stocks in the market. In this specific set of commercial and services, the biggest gainer was long-on publishers, which did gain by 3.52% on its stock, while TPS East Africa's, basically Serenum, did gain by 3.33% on its stock. And these gains were supported by routine buying and optimism around, specifically for Serena, around the hospitality sector. We all know where we are currently in the hospitality sector season. We are inching towards the best season in hospitality. So that also contributed to the ramp up in the stock or share price of Serena stock, okay? And then on the losing side, as I've mentioned, we had the media companies. Standard Media and also Nation Media were the two biggest losers under commercial and services. And Standard Media did lose by 4.49%, and Nation Media did lose by 1.13%. Of course, the two media companies have different dynamics, because for Standard Media, it is about the structural changes which has been going through, and also that has impacted investors' sentiments, and also has been having some kind of like issues with the state. Therefore, also that has caused some negative investor sentiment, causing the stock to decline. While Nation Media Group's decline in share price was mainly due to normal market volatility and profit taking, which of course typically happens start of the new week, right? And then the fifth sector, we have construction. Guys, this sector largely remains subdued. And I'm saying so because, of course, based on what is on paper, 60% of the listed companies in this sector didn't have any trading activities for different reasons, as you're going to see. The biggest gainers in this sector were two companies. There's the East Africa Portland Cement, which rose by 2.25%, and the Crown Paints, which did gain by 1.27%. Of course, both gains were mainly due to routine market trading. And of course, we all know for the East Africa Portland Cement, there was restructuring, and then now the Armstrong Group is trying to revive that particular company. Therefore, we are seeing also intermittent gain in stock price days, maybe over weeks. We've seen that increase over the recent few weeks, okay? And then talking about the companies in the construction sector, we didn't have any volumes. East Africa Cable is just because of outright no interest, right? There was no interest, therefore no recorded trading volumes, therefore no change in price, despite it being very active. And then the other two companies, which are still listed under construction, the Earth River Mining and Bamburi Cement, these didn't have any volumes because we know these two companies, they had some issues which caused some administration maybe a few years ago. That resulted in them being suspended from trading at the NSE. That's why we haven't seen any volumes for a while under the stock of Earth River Mining and also Bamburi Cement. And then the sixth sector is the energy sector. Guys, energy sector really had a very, very amazing run in recent weeks. And of course, today it did post mixed results. There is no cause for alarm on these because it makes sense. We are at a season of profit taking and also different individual company dynamics. The biggest gainer from this particular sector was KenGen, which did gain by 4.07% on its stock. And the gain on KenGen stock was supported by the positive market sentiment and of course sustained investor demand. And we all know sometime earlier in the year, the KenGen company did also announce its interest in really jumping and going very hard on renewable energy. So that really bolstered the individual investor sentiments, therefore causing the stock to continue improving over time. And then on the downside, we have Umeme, which did decline by 1.98%, and Kenya Power did slip by 1.15% on its stock. Umeme's decline was mainly due to its ceasing its distribution of electricity in Uganda. After it having distributed for over 20 years, that cessation happened sometime end of last year, and the effects of this have been felt on the stock, despite it being still cross-listed at the NSE. And then Kenya Power slip of 1.15%. I'm pretty sure in case you are in Kenya, you've actually seen something has been happening interestingly on Kenya Power's end. And we also, for example, even during this weekend, there was issues around tokens, right? And beyond that, also following Kenya Power's strong rally, more so in the past 1 year, also investors have been taking profits. So a combination of these factors have caused this particular stock to decline by 1.15% today. And then the next sector is insurance sector. Insurance sector, guys, continue to be on the positive momentum. And today, the biggest gainer was Jubilee Holding, which did gain by 2.83% as investors responded to strong financial performance and improved dividends and attractive valuations, okay? And then second biggest gainer was Britam, which did gain by 1.65%. And this follows renewed investors' optimism after receiving of the court order sometime earlier in the year, which paved way for Britam to be able to pay dividends in future. And then the companies which did decline in this particular sector, we have Liberty Kenya Limited, which did decline by 2.04% decline on its stock. This was mainly due to profit taking and continuous sentiments following weaker earnings per share last year. Whereas we have Sanlam Kenya, which did decline by 1.86%, and this was mainly after the recent strong rally in the market. So no big cause for alarm on a particular stock. And then the eighth sector is the investment sector. This sector is interesting because we saw the companies in this sector struggle recently. But today, Centum Investment did gain by 9.66% in 1 day. And this was after announcing a significant high dividend supported by stronger cash flows and debt-free parent company balance sheet, which is actually closed the parent company balance sheet to be debt-free for the first time since 2020. And then the second biggest gainer is Olympia Capital, which gained by 6.31%. And for this, it isn't really backed by any fundamental. It's more about reflecting buying interest on a relatively low volume counter. If a counter is low volume, even the slightest of interest can make the stock to swing whichever way, positive or negative. So that is what is happening on the Olympia Capital stock. There is no fundamental related to this particular stock which is causing it to move. And then the biggest loser or the company which dropped the most in this particular sector is Home Africa, was where we saw a decline of 0.97% on its stock. This is mainly due to continued speculation. Of course, we all know Home Africa has been having restructuring more so in recent years. So there's that particular continuous speculation, which did cause a decline of 0.97%. And then the ninth sector is investment services. This is the self-listing of the NSE share or the NSE stock, which did gain by 0.98%. And this is extending its recent positive momentum. Nothing really major out of the blues. This is a reflection of the momentum in the market. And then the 10th sector is manufacturing. Manufacturing today did have, if I can say, a more stable kind of like performance in the market. And I'm saying so because the biggest gainer was Shri Krishna Overseas Limited, which did gain by 7.3%. And for this, it is mainly due to it also being a low volume kind of stock. So any action on a particular stock can cause movement in whichever direction. Of course, we all know Shri Krishna Kenya Limited, Overseas Limited, is a company which makes corrugated packaging materials. And there's been momentum around it finalizing its plant in Kajiado, which hopefully is going to be able to increase its capacity. But as of today, this change is mainly due to buyers' interest on a low traded volume stock. And beyond that, also other companies like BOC, East Africa Breweries, did have marginal gains, right? 0 point something across the stocks. And this was mainly due to modest gains and less about there being any major big change in fundamentals, more about adjustments or price correction in the market. And the biggest loser was Afrimega Agricorp Limited, which did lose by 2.75% on its stock. And this was mainly due to investors taking profit, right, after a recent remarkable rally in the market, but also there's that particular backdrop of it having management uncertainty, because the company did appoint a new acting CEO sometime in early June, and also it's having a change in strategy, moving from the traditional Kenya orchid to this new particular strategy around embracing tech in agriculture and so forth. So this has also contributed to the stock declining by 2.75% in today's trading at the NSE. And then the next sector, which is the 11th sector, is telecommunication sector. Guys, telecommunication sector, we have Safaricom as the only listed company. And today we saw Safaricom did have its stock decline by 1.09%. That marginal decline is no cause for alarm. And I'm saying so because investors are repositioning ahead of its dividend record debt, which of course we all know needs to close within the same day following yesterday's AGM. And this is a common pattern, right, before a stock begins trading ex-dividend. So this decline is expected, nothing out of the blues. And then the 12th sector is real estate. Guys, under real estate, we have several listed REITs or real estate investment trusts. And there's no significant price movement on these because risk market is traded in closed kind of like trades. So there's no movement, and that's why we haven't seen any change in prices. And then the 13th sector is the ETF or the exchange traded funds. And the ETF trading remained relatively quiet today, mostly because we only have two ETFs at the NSE. There's the new gold ETF, which did decline by marginally about 0.4%. And this is a reflection of also the global decline of the gold spot market. Because when there's a decline in the spot market, it causes the dollar pressure to increase, therefore also causing the NSE stock to decline in its value. And then the second ETF is the Satrix World Equity Feeder, which didn't have any change in price despite there being some trade volumes. And this also reflects the lack of change in the underlying equities, because ETFs is a bucket of several equities out there. So also there wasn't very huge movement in the underlying equities. Therefore, the Satrix World Equity Feeder didn't have any change in price. Guys, what do you think about today's performance of different stocks at the NSE? Which ones have you invested in? Which ones are you looking to invest in? I hope this particular video sheds some light which you can utilize for you to be able to really appreciate what is happening at the NSE and in the Kenya stock market at large. Cheers, guys. Look forward to catching up with you in the next videos. Bye-bye, and you all take care.